Namaste, viewers. It's Monday morning, February 17, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's early morning news, where we provide you the latest, concise, and precise stock market wrap. Sensex and Nifty fell for the eighth session for the first time in 2 years on February 14 as fears of relentless FII selling and weak Q3 earnings overshadowed any optimism sparked by easing Russia Ukraine tensions, a delay in US tariff impositions until April, positive US producer data, and hopes of tariff discussions between Indian Prime Minister Narendra Modi and US President Donald Trump. Frontline indices, however, survived the day with minimal losses, recovering from intraday lows towards post-noon deals. At close, the Sensex was down 199 points or 0.3% at 75,939, and the Nifty was down 102 points or 0.4% at 22,929. Nifty is currently 13% below its all-time high, while the Sensex has declined 12% from its peak. Sensex and Nifty fell 3% each for the week ended February 14. Among the Nifty 50, Bharat Electronics, Adani Enterprises, Trent, Adani Ports, and Sun Pharma were the biggest losers. Meanwhile, Britannia, ICICI Bank, Nestle, Infosys, and TCS emerged as the top gainers. The Nifty Small Cap 100 Index officially entered bear phase on Friday, with the index slipping around 22% from its peak of 19,716. The index lost nearly 4% on Friday to close at 15,373 levels. Friday's fall came on the back of across-the-board sell-off in the broader markets that saw mid-caps too end weak. Pharma stocks came under selling pressure amid reciprocal tariff threats from the US on Thursday. Natco Pharma and Laurus Labs were among the top losers in the space that slipped over 9% each. These two counters also form a part of the Nifty Small Cap 100 Index. IFCI, Glenmark Pharma, Finolex Cables, HFCL, BEML, and Apar Industries are some of the other counters that comprise this index and skidded over 7% on Friday. The Nifty Midcap 150 Index lost nearly 2.5% in trade on Friday to close at 18,325 levels. All 13 major sectoral indices were in the red, with Nifty Energy, Media, PSU Bank, and Pharma taking the hardest hits. India stock market capitalization, meanwhile, dropped below the $4 trillion mark for the first time in more than 14 months, bogged down by a weak rupee against the US dollar. India's total market cap now stands at $3.99 trillion, its lowest since December 4, 2023, down from a peak of $5.14 trillion in mid-December, marking a staggering $1 trillion erosion. SIP stoppage ratio jumps in January. Data for the month of January shows that the stoppage ratio surged to nearly 109%, a significant jump from 82.73% in December and 60.72% in September last year. In January 2025, FIIs offloaded Indian equities worth rupees 87,374 crore, and so far in February, they have sold shares worth 24,888 crore. In stock specific, ITI shares fell nearly 5% after the state-run telecom product maker reported a net loss of 48.9 crore rupees in the December quarter, compared to a net loss of rupees 101.3 crore rupees in the same period last year. Deepak Nitrite shares plunged 15% after reporting a more than a 50% drop in Q3 FY net profit to 98 crores from 202 crore rupees a year ago. Senco Gold tumbled 20%, its steepest decline since listing, with the last significant drop of 19% occurring in October 2024. Shares of fertilizers and chemicals Travancore plunged over 8% after the company reported a 74% drop in net profit to rupees 8 crore from rupees 30.3 crores a year ago. Shares of Haranba Industries tumbled 10% after the company posted a net loss of rupees 10.2 crores compared to a profit of rupees 14 crores in the same period last year. In the US on Friday, stocks finished the week higher after a mixed Friday in which the S&P 500 fell short of a new record. For the day, the Dow Industrial slipped 0.4%, while the S&P 500 dropped less than 0.1% after rising at times above its closing record of 6,118 from January. The Nasdaq Composite ticked up 0.4%. US markets are closed today, Monday, for the President's Day holiday. The analyst's view for the Indian market. The Nifty, according to technical analysts, continues to reel under a bear attack. The overall sentiment remains weak, even though the index managed to close 155 points off its low on Friday as it continues to trade below a critical short-term moving average. A decisive fall from 22,800 could trigger further panic in the market. A decisive close below 22,000 on the Nifty for a few days could trigger a sharp decline of 500 to 1,000 points. 500 points on the conservative side and up to 1,000 points in a more aggressive scenario. However, if Nifty holds about 22,800, we might see a relief of 200 to 500 points in the upcoming sessions. On the higher end, 23,100 appears to be the immediate resistance above which the market may see some respite. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, share, and like this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.